about 5.3%. We'll be discussing that. Dilip Bhat is with us. I'll go back to DLF a little later, Mr. Bhat, but I'll start off with Sesa Sterlite. The Supreme Court order seems to suggest that anything that was unsold up to 2007, any iron ore unsold up to 2007, that belongs to the state and that has to be returned, and that is going to be auctioned through a committee. Now, how do you make that distinction really on the ground?
Sure. I think if I'm correct, in the first place, this Supreme Court judgment, if I've understood correctly, is just the reaffirmation of what they had earlier passed. This judgment was passed earlier. So I don't think that this is something which is come up today. Now, I think what you say, absolutely, that remains a very complicated issue and very nebulous to really find a proper solution to that. And even if it is implemented, I think it only means bad news for the company. So I think your question is certainly a question, but I don't think that anybody has a very clear answer on that, how those demarcations will be done. So I think that that confusion still remains in the minds of everyone, and more so in the stock market, and which is why we are seeing the pronounced bearish reaction to this, not just in Sesa Sterlite, but across all the steel and the metal companies at the moment.
I think we're just getting some information from our senior Supreme Court correspondent that a company called Bhandar Brothers, they had gone to, Bhandar NIs had gone to the Supreme Court saying that if iron ore mining has been declared illegal from 2007, then anything that has been lying in the state prior to 2007 should be allowed for sale. Prashant has been talking to several people who know details of this. Prashant, what else have you got?
I got a couple of panicked calls on it from market participants just wanting to check what is going on, because let me tell you what the basic confusion, right? The basic reason why the stock went down 12% was that news wires all reported, the big crack, all reported that, and let me just read this out verbatim, iron ore mined before 2007 in Goa belongs to state, right? This is what the news wires have said, and I think channels all flashed this. Then our Supreme Court correspondent Vaidyanathan, and we put that information out earlier. This is what is actually true. This is what the Supreme Court has said. The reality is the company, Sesa Sterlite, wanted Supreme Court to give permission to sell iron ore which was mined before 2007 and which has been unsold. So the issue was not, I mean, if what the newswires reported first was essentially what the issue was, then then that is huge. And then that 12% correction would have been warranted. Then you would have had a situation like what has happened in the case of coal. It would have meant subsequently that companies like Sesa Sterlite, which have taken out coal, made profits by selling it at international rates, would have had to compensate by paying out, one-time sort of compensation or something like that. Which is not the case. The reality was the company wanted SC to give permission to sell iron ore which was mined and unsold before 2007, which was mined before 2007, which was unsold. The Supreme Court has rejected that application and said that, well, nothing doing, it belongs to the state. That is the reality, and I think that's the reason why you're seeing the stock actually recovering very, very sharply. But for a moment, I think there was a fair bit of confusion, and a lot of people sold when initially I think that news came in, as you said. I think Anand Vaidya sent another mail, which clarifies the matter further and provides exactly who petitioned the court in this particular matter.
Which is not Sesa Sterlite.
Yeah.
Now it appears to be that so essentially it's not even clear whether Sesa Sterlite has any any inventory which is prior to 2007. So I wonder what the implication really is for the stock. Someone will have to find that out, and the markets, as you pointed out, crashed by 12% and then recovered. Mr. Bhat, DLF next. Would you buy at this rate, at this level?
Well, two issues in this. One is that there is a good amount of selling which is happening. So what happens is, as what I understand, that once SEBI gives this kind of a decision, there are a lot of implications in terms of, say, FIs or anybody who's holding this will probably like to stay away from this particular counter for the corporate governance issues. And that really triggers and prompts people to keep on selling and stay away from this. So that is one. So at the moment, I think one should stay away from the stock for a while, though it is very clear that the intrinsic, if one were to take the value or the NAV of all the properties put together, even on a DCF basis, will be much more than the market cap of the company at the moment. But that is not the issue. I think there are 2-3 issues which are really worrying the market. One is the SEBI order of banning them from the capital market. And even that, if I understand, the REIT proposal also will not go through. So in all, the debt of DLF may not come down, and servicing this debt will become a problem in the short to medium term. I don't think that probably it may actually
Mr.
result
Bhat,
in a
we were
problem,
speaking to
but that
Sanjeev
really
Prasad just a short while back, and he was saying that, you know, that debt is not really an issue. The kind of cash flows DLF has, it can easily pay off the interest, and it really doesn't need the QIP. There was a plan, we were hearing there's a plan for a QIP. It doesn't really need that. And as you are pointing out, the NAV itself is almost twice what the stock price at the moment. 110 rupees is the stock is trading at. NAV on a conservative basis is between 200 to 220 rupees. Now, effectively, you're saying that there is no intrinsic value to any of these companies if FIIs don't find them interesting.
No, I don't think that's the... I said in the short to medium term, the apprehension will be, in my opinion, the cash flows will not be sufficient to service the debt, both the interest as well as the repayment of the debt. Okay. So I think if they are not allowed to access the money from the capital market, that will remain an overhang. Gradually, as these worries get diluted, I think people will buy into the stock.
So you actually differ, and you're saying that the free cash flows are not going to be enough to, or there'll at least be some kind of a pressure. That's what you're saying.
There will certainly be some kind of pressure.
All right. And okay, let me throw the question open to the broader markets. What are you currently doing, Mr. Bhat?
Well, I think the markets probably have so far respected 7,800 on the Nifty level, and it has not breached downwards. But the way the volatility is happening in the markets, when we see sudden sell-off in our own markets and then recovery, and not just here, even internationally, I think things are a lot more in a state of flux. We have seen a lot of selling, a lot of recovery happening. So my understanding of the entire situation is, or the experience says, that whenever there is this kind of volatility, which happens over here as well as abroad, it generally results in a much deeper correction. So I think sometime, whether the markets can correct to 7,500 on Nifty, I don't think it's impossible, and one should be ready for that. But the basic undertone remains bullish. It remains a buy on dip market. But maybe on the downside, probably 7,500 looks very much a potential possibility.
And what would you, if that happens, what would you be buying first?
I think the way Infi has come out with the results, I would still bet behind the IT stocks, because the way on a relative valuation, some of the other stocks have been looking much more expensive than the IT stocks. So I would still look to buy Infi, I would still look to buy TCS from the current levels. And I think slightly on a broader basis, Reliance Industries or maybe HPCL looks pretty interesting to buy. And probably I would buy them as the market goes in for further correction, if at all it goes in for further correction. I think HDFC Bank also has relatively underperformed quite a bit. So I think that also should be on the radar to buy.
And what did you make of the Reliance numbers?
I think the numbers are clearly much ahead of the expectations, and I think valuation wise it's trading at one of the lowest valuations since the last couple of years, And I think the potential to unlock for the gas price still remains. Probably it is very much in the price because nobody is really valuing the gas at the moment. And I think as and when that happens, we don't know when it's going to happen, whether it's going to take another 3 months, 6 months or 1 year. But I think slightly on a longer term basis, reliance from the current level and from the lower levels, I think they appear to be pretty good. And I think the results have clearly showed that the company has a tremendous potential.
So
to
you
really,
would buy Reliance at
ahead.
this level, right? Is it fair to say you would be buying Reliance?
At the slightly at this and at the lower levels.
All right, at this and lower level. Dilip Bhat, thank you so much for joining us. Thank you for waiting because of the breaking news.
Always a pleasure.
We hit you slightly late. Pleasure talking to you. We're taking a short break, and after that, A.V. Rajwade will be joining us. We'll be discussing the rupee and other macro issues with him.